I know that Ray Dalio, your colleague, also about a year ago said cash is trash in this environment. The idea that cash is getting devalued in places like the United States is printing money. What is the trigger for that to actually be borne out?
Oh, it's been borne out. We have a massive wealth rebalancing going on right now in the world. And there's a rebalancing between the Western Hemisphere and the Eastern Hemisphere and Asia. And there's a rebalancing between asset holders and debtors. And part of that is what we're talking about. But when you look at the return of cash, we have massive wealth destruction going on right now for asset holders, which to the benefit of debtors to relieve those pressures on the debt side. We've already had a 15%. If you were a holder of T-bills or cash of some sort, we've already had a 15% decline in your real purchasing power.
Right.
On your assets and counting, right? Another 10 years and it's going to be 35%. You look back through history, cash is one of the riskiest assets that you can hold through environments like this. You go back to the 30s and before, you had 50 and 80% drawdowns in your real purchasing power by holding cash. That's now spread to bonds, which locks it in. So among the most expensive assets in the world are cash and bonds, and they're destroying wealth through negative real returns. And that's fueling a movement of all of that liquidity into these other assets. And it's also it will be fueling a movement of money out of dollars. It's already begun into different areas, right? We've seen gold up. We've seen the dollar down against the euro 12%, down against the yen, down against the RMB. Money's moving. You see, the money's been printed in the country, and initially it stays in the country and drives the local assets up. And then it goes out of the country at some point because the yields and the currency are unattractive. So when you look at sovereign wealth funds around the world, where are they located? Not the United States. They're located in Asia. They're located in China, Korea, Singapore, Hong Kong, Australia. That's where the money holders are. And for them to hold dollar assets is a risk position. So they're making 50, 100 basis points on their bonds, and they're taking now so far a 6 to 12% loss on the currency. You know, are you going to keep buying those bonds as the Treasury's issuing them? That's going to put pressure on the Fed to buy the bonds. And now what happens if we get a pop in growth and a pop in inflation, and the need to buy the bonds as the long rate is rising? Well, that's a dangerous situation for the dollar.